Even with the Ant edge, competition in e-commerce in China has been fierce. You've got Pinduoduo, JD.com just nipping on the Baba heels. Why is that?
Well, I mean, for a couple of reasons. First, the market is just ginormous, right? I mean, the other thing is Baba, up until very recently, had over 80% market share of e-commerce with some incredible margins, 40% EBITDA margins. And so over time, that just brings in a lot of competition, as it should be. What's interesting to us, and as you know, Baba hosted their day one of a 3-day analyst day last night, and they're still talking about growing the MAUs. They're still talking about growing the monetization of their user base, especially in some of these less penetrated areas where even Pinduoduo is trying to compete, like tier 3, 4, 5 cities where consumption is going up, internet penetration is going up, et cetera. So it's just very, very attractive market where you have dominant player in Alibaba, and so you have a lot of smaller competitor trying to get a piece of the action.
Right. So, Youssef, though, my point, though, is that if it has the insights of China's leading payments app, why doesn't Alibaba have more of an edge? How does it keep that, headway against some of the other e-commerce players? And also tell our viewers a little bit about this dynamic between Alibaba and Ant, especially because the IPO is coming up and it is likely to be the largest IPO ever.
Well, I think that Alibaba does have an edge in that by leveraging Ant, they've been able to continue to very successfully drive more monthly average users to the platform, more mobile user to the platform. I mean, as of last count, they have about 800 million users. That's larger than anybody out there. And even at 800, they're still adding 20 to 30 million users a quarter. That's in large part driven by Ant. The other thing is, over time, just like what you saw with PayPal and eBay, they have to part ways, right? And what we're seeing with Ant's IPO is a reflection of that. Alibaba is not the majority shareholder, only own 33%, but there is still an opportunity for them to continue to work closely through some arm's length agreements. So, Pinduoduo doesn't have that. I can't really think of any other large player that has that kind of a potential leverage.
Youssef, is Alibaba the most undervalued cloud era conglomerate, or is it maybe the only fairly valued one? It just strikes me that we used to be talking about it in the same league with Google, with Amazon, but it's, cheaper market cap wise than both of those. It's nowhere near $1 trillion, whereas Amazon's at $1.5 trillion in market cap. What's going on there?
I would argue that Baba, generally, not even just the cloud business, is one of the cheapest mega caps out there. For a company that's still growing, I mean, last quarter they put up a 34% growth rate. The quarter before that, which was in the middle of the pandemic, they still grew 22%. We'll see what they say tomorrow night if they provide any new guidance. But this is a business which I think is going to continue to grow somewhere in the 25% range for the next 5 years, right? At their range or at their size. That's incredible. Within that, you have cloud, which I think is a crown jewel there. Unfortunately, that business, because it's not U.S., because it's first and foremost focused on China and to a growing degree Southeast Asia, it doesn't have the type of visibility that Google Cloud gets, that Azure gets from Microsoft, or that certainly Amazon